Welcome back to the channel, everyone. Today I've got some absolutely ridiculously incredible news about the AMC stock. Today I'm going to be talking about the recent failure to deliver data that was just announced, and how actually this data impacts the current fails to deliver as of today, Sunday, the 4th of July. Trust me guys, you do not want to miss this. So stay tuned and let's make some money. Before I dive into the video, I just want to give a massive shout out to the 750 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell, because that way you won't miss another video just like this one. So guys, I want to dive straight in with the key information. As you can see, this is the fail to deliver data for the first half of June. We can see a massive spike in the failures to deliver, up to 5.4 million fails to deliver when the AMC price was spiking. However, for the rest of that first half of June, we saw a much lower level of failure to delivers, around 1.79 million shares, 1.2 million, 1.4 million, a rock bottom low of only 50k, up to 1.1 million, and then flat around 300,000 failures to deliver. Now you might remember that the AMC stock was recently added to the NYSE threshold securities list, which is a list of companies that have had a lot of failures to deliver in the past few days. It was added on the 24th of June, or the 25th of June, sorry, because on the 24th of June, the AMC stock wasn't there. Therefore, it was added on the 25th of June, there it is, and it's still on that list as of Friday, the 2nd of July. That means it's been on that list for 1, 2, 3, 4, 5, 6 days so far. If you didn't already know, a threshold securities list is a list of securities whose transactions failed to clear during the previous 5 trading days. These settlement failures may be indicative of naked short selling, although it's not 100% indicative, because they could be caused by benign factors such as administrative errors. A failure to deliver is simply the inability of a party to deliver a tradable asset, whether that's on the long side, as in just selling the stock that you've previously owned, or on the short side, going short on shares that you don't yet own. In terms of how you get on this threshold securities list, there have to be aggregate fails to deliver at a registered clearing agency of 10,000 shares or more per security, and the level of fails must be equal to at least 0.5% of the issuer's total shares outstanding. Now, in terms of AMC, they have 513.33 million shares outstanding. Multiplying that by 0.5% is 2.56 million shares, as in there have to be at least 2.56 million fails to deliver on a daily basis. Now, to get on this threshold securities list on Friday the 25th of June, there must have been sufficient failures to deliver for the previous 5 trading days, and therefore it all started around Monday the 21st of June, as we had 1, 2, 3, 4, 5 days of failures to deliver, 6, 7, 8, 9, 10 days so far. But what happens when we get to 13 days? Well, from the SEC website, although as a result of compliance with Rule 204, generally a participant's failed to deliver position will not remain for 13 consecutive settlement days. If, for whatever reason, the position does remain for 13 consecutive settlement days, the requirement to close out such position under Rule 203B remains in effect. Rule 203B of Regulation SHO requires that participants of a registered clearing agency must immediately purchase shares to close out failed to deliver positions in securities with large and persistent failures to deliver. And therefore, if the big hedges or the big institutions reach that 13 consecutive day period, then the clearing agency will forcibly close their short position by buying back their AMC shares. But here's the really interesting part. To get on that threshold securities list, there have to be at least 2.56 million fails to deliver on a daily consecutive basis. If we go back to that failure to deliver data that was just released for the first half of June, there was only one singular day throughout the entire first half of the month where the fails to deliver exceeded 2.5 million shares. We can see that for the rest of the month, the fail to deliver position was only around 1.79, 1.2, 1.4 million shares, and therefore, with only one day of fails to deliver or one day of high failures to deliver, the AMC price spiked massively. Therefore, when the second half of this month's data gets released, we're going to see a massive spike upwards in failures to deliver to at least 2.5 million shares per day failures to deliver, maybe even higher, maybe even 5 million shares, maybe even higher, and it'll be for at least so far 10 consecutive days as well. And therefore we can see that the hedgies and the big institutions are trying to throw absolutely everything they can at the AMC stock to try and crush it. They've obviously been having these failures to deliver of over 2.5 million shares for days on end, and they really can't seem to budge the AMC price, as we've been holding in this range between $50 and $60 for a few weeks now. When that 13 consecutive day period is over and the hedgies are forced to buy back those failures to deliver, the AMC price is going to absolutely skyrocket. 13 consecutive days will be the 8th of July, which will be around here, very close to the end of this bullish pendant. Therefore, when the hedgies and the institutions are forced to cover their positions, I expect this pendant to break upwards and the AMC stock to push on to new highs over $72, over $77, maybe even over $100 and even higher. We can see here from the dark pool data on StockGrid that the net short position has been decreasing on a daily basis, and therefore the hedgies are absolutely running out of fuel to add to their short fire. At one point the net short position was around $30 billion, but as I said, it's been decreasing on a daily basis, with some days they weren't even net short, they were net long. This net short position has decreased massively from around $30 billion to only around $18 billion. Part of that is because the hedgies haven't been adding more fuel to the fire and they've actually been closing some of their short positions here, but it's also because the AMC stock price has fallen slightly. The price here for the AMC stock was around $58, whereas here we obviously closed at only around $52. However, the Ortex data for AMC is still showing an absolutely massive estimated current short interest position of around 94 million shares that has been increasing, albeit by small amounts. Guys, if only one day of over 2.5 million fails to deliver can do this to the AMC stock price, imagine what 10 consecutive days of over 2.5 million fails to deliver will do to the AMC stock price when the hedgies and the institutions aren't trying to hold the AMC stock down. When the hedgies are forced to cover their failure to deliver position after 13 consecutive days, and when the hedgies have fully run out of fuel to add to their short fire, the AMC stock price is going to absolutely explode. Guys, if you want to pick up some shares in AMC, but you haven't even yet signed up to a trading platform, be sure to check out the links down in the description below to get some free shares, whether you're in the UK or in the US or even in Europe. You can currently get 2 free shares worth up to $1,850 with Webull at the moment if you're in the US, and a free share with free trade worth up to £200 if you're in the UK or in Europe. And as always guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers!